Of new fixed price mechanism for voluntarily delisting as an alternative to the reverse book building process also restricts registered entities from using unregulated entities, including finfluencers, to market their products. Reliance Jio has gone on to hike its tariffs for the first time in 2 years. The average hike across various plans is around 20%. Also, it goes on to announce a new unlimited data plan, which will be effective from the 3rd of July. Airtel and Vodafone Idea are likely to follow suit. Well, those are quite some interesting cues to be tracking. But if you have to go by what we are seeing in the FNO cues, that's also quite interesting because the index really suggesting that it has shown as a spectacular June series, 7% of gains coming in there for the Nifty, whereas touching those 24,088 levels there for the sensex, it was 79,369, the high that it touched, whereas for the bank Nifty, which retreated a bit later, but 53,181 is that the highs that index touched. Now, it was the cement and telecom stocks that really continued to gain, whereas the PSU banking bit saw some bit of slip in yesterday's trade at least. And when you look at the market breadth, it still is in favor of decline. So your advanced decline ratio is still at 1:2, which might be concerning, but not that much of a concern. Now, if you look at the option cues on the other hand, we've moved past that 24,000 level. So now the open interest, the maximum call open interest that we saw, it was in the 24,100 strike, about 1.45 crore worth of contracts that were seen for that particular strike. Whereas on the put side, the maximum open interest was seen for the 24,000 strike with 1.67 crore worth of contracts. Now, if you look at the PCR, then that one has also gone on to increase to about 1.49 versus the 1.31 levels that it saw. And since we're starting a new series today, the July series, well, there's no stock that are in the FNO ban list for June 28th. Whereas you look at the fund flows, now we did see some exciting, trends take place there for all of the month of June. In fact, FIIs, if you see just yesterday's trade, there were net buyers of about 7,658.77 crore worth of equity shares in the cash market, whereas the DIIs, they went on to sell stocks worth 3,605.93 crore worth of equity shares. And the volatility index also has pretty much cooled off, but is around that 14 mark. And we said that perhaps if it goes beyond 15, there could be, one could be more cautious at this point. But the bulls still remain comfortable. We are seeing that fear gauge that has risen just by about 0.77%, now at 14.15 versus the 14.05 levels that it was at. Well, quite interesting to see how we are going to be taking our strides in the July series. And let's discuss what kind of strategies one can adopt. And joining me for that now is Raja Venkatraman. He's the co-founder at NeoTraders. Good morning, Raja. Always a pleasure to have you with us. Let's look at, just plain the indices, the index right now, the Nifty. We have crossed that psychological 24,000 levels, but could we perhaps see some bit of profit booking now at the highs, or do you think there is, much more higher that we can go from here? What are the charts saying?
Yeah, so first of all, good morning, Stacy, and thank you for inviting me to the show. Now, when you take a look at the overall market scenario and the kind of sentiment that has been flowing, there have always been some hesitation that has been cast over whatever has been happening. And especially if you see the entire June series, the entire month has been spent in quite a lot of hesitation. And I think that hesitation is bound to continue. But then when you take a look at what is really transpiring on the ground level, like you rightly said, we are having some positive news flow coming in, and in the second half of the day, we could see some more positive traction coming in. And when you take a look at the sector that was not participating, which is Bank Nifty, right? So now you can see that the Bank Nifty is striving fully forward. It's helping the Nifty reach a new high. So overall, the indices are looking promising, and I don't think there is any reason for us to initiate a short here, because those who have shorted at lower levels are regretting now, because first of all, they had to exit their position, And the second is that the mindset was not there to initiate long. And now what has happened is that the psychological level of 24,000 has been crossed. So as per the option data, we are having a decent PCR at 1.08, and with the option data indicating that 24,000 level is going to be held for the near future, at least for the next 1 week. I believe that any dip towards this level should be used to buy into. Yes, we are beginning with a possible mild gap up, but then what we have to see is we are looking at a Friday, start of the July series. So one should not get too excited, but then it definitely is a positive traction. And if you were to look at support levels, I see 24,000 and 23,700 as two support levels. On the upside, there is room till 24,500 for the next 2 weeks at least. I see that these are two levels which one should be tracking as far as the Nifty is concerned. And Bank Nifty, there is room on the upside towards 55,000. And on the downside, we can expect a support zone towards 51,000.
Right. So 55,000 is what you're looking at the Bank Nifty, and we'll talk about, how much time it will get to take there. But do stay on with us, Raja. Let me also tell our viewers a little bit more about a whole host of block deals that are taking place, and a lot of promoters thinking this is the right opportunity for them to be making that money and, pairing their stake within the companies. What we're getting to hear of, one is that of Polycab today. Now the promoters are likely to sell up to a 2.04% stake in the company. This will come at an offer price which will range at about 6,535 to about 6,989 rupees per share. Now, given this, if it has to go with this, the discount is of about 6.5% to that current market price at where it's trading. And the offer size, if you look at the lower end of that price band, the total offer size then comes up to about 2,005 crore rupees. So there will also be a lock-in period, of course, of 90 days for the sale of these shares. So the promoters of Polycab here looking to pair their stake. Another one that we're getting to hear of is that of Sami Hotels. This one also where GTI Capital Alpha is likely to sell about 3% stake in the company. The floor price for this one is put at about 187.07 rupees per share. If you look at this, it's just about a 1% discount to the current market price, but also the base price of the deal at being about 3%, and also maybe an upsize to that, an option to go to about 5% if they have to. Now, this could then make that the offer price is about 120 crore rupees. And then if they do choose to go on an upsize, then it will be about 193. So GTI Capital looking to pair its stake in a Sami Hotel. So two of those big block deals. Another one also from HCL Tech, which will be quite interesting to watch out for. But let me now quickly take you through those, the cues and what we're getting to see on our screens there. Quite a nice sea of green, we would say at this point, for the July series, where we're starting above that 24,000 levels, almost 24,100 levels there for the Nifty 50. So a good 0.2% of gain that we're seeing above that 24,100 level. So newer highs there once again. The sensex as well at that 79,500 odd level. So good gap up there, 260 odd points that you're seeing on the sensex as well. The Bank Nifty also seeing some good gains, about 100 points that it has added, 55,000. That's the mid-cap index on your screen, 55,500 odd levels that the mid-cap index is also trading with, whereas the small-cap index also there a good 250 upwards of points that it has put on in opening bell. So both of your benchmarks as well as broader indices both trading with good healthy gains. The Bank Nifty as well seeing about, we'd say, rather flat at this point for the Bank Nifty, but still in the positive. So quite interesting. All of your major indices are in the green in the start of this July series. Let's also look at the gainers and losers on the Nifty 50 then today for at least this session. that will pop up on your screens in just a bit. There you have it. You have Reliance Industries, of course, there after what the Jio price hikes have happened. That one is going to see some good traction. Bharti Airtel as well. This perhaps on the anticipation that they too will follow suit. You also have the likes of Dr. Reddy's Laboratory from the Pharma Pack, that is among your gainers. You have Coal India, ONGC as well as Hindalco among your top gainers. HUL from the FMCG pack as well as Tech Mahindra, that is among your gainers. Let's also look at the flip side and the losers in today's list. You're looking at Ultratech Cement, perhaps all that profit booking after all the gains that it saw and the block deals that went into, and also the acquisition, or rather the buying of India Cements that has happened. You also have IndusInd Bank as well as Grasim, that is making it among your laggards for today. M&M from the Auto Pack is back among your losers. Adani Ports as well as Hero Motocorp from the Auto Pack that you're seeing among your laggards in trade. Maruti is joining them, LTI Mindtree as well as ITC. So you have a couple of auto names there languishing, we would say, in the laggards list. But that has been for a couple of days, in fact, that we are seeing the Auto Pack not really react, and also now that we are in anticipation of the monthly numbers, that's what we're seeing the Auto Pack do. Quickly back to you, Raja. Now we've started there on a good footing, we would say, for the markets, but there is some sort of a sector rotation, we would say, that has happened in these past few weeks. At least we're seeing the heavyweights back again, with all their might and show. Do you think that this rotation is required, and now that there are hiccups towards the mid cap, so you'd call them overpriced? How are you looking at this?
So when you take a look at the market scenario, the mid caps were moving quite well, and this was ahead of the election. And now post the election results, we see the table shifted, and the large caps are the ones who are now leading the race. So when you take a look at the overall market scenario, you definitely are seeing some shift in the perspective, and that's why you're seeing all the sectors which were laggards, like the chemical sector or the banking sector, they are the ones who are firing now. So this kind of sector rotation is going to happen, and one should be ready to accept this and participate along with it, because overall market is definitely on the positive side, and we can see that the trend which we are expecting for the market is definitely on the bullish side. So when you take a look at the market situation, when you take a look at how the stocks are performing, they are very much in line, and the large caps did not have much to say on the lead up to 24,000. So maybe now they will have a chance to participate and show their might, because if the market has to move ahead on a solid note, then we will need the help of the large caps. And that's what we are seeing, especially when you take a look at the banking space. The large caps have been performing quite well. And this should definitely be a positive sign for us to consider.
Right. Do wait on, Rajan. We'll get some queries answered in just a bit. But let me also tell our viewers about the big other headline that you're going to see across business news channels today. That is about the market regulator, SEBI, and their board meet. And they've come out with a couple of interesting takeaways from that. Now, one is they're going to be putting in a new criteria for entry of FNO stocks. They will put out a circular, and post that we'll know what this criteria is and what stocks are going to get enter there. But they say the net increase on the back of the new FNO criteria will be about 5 or 6 stocks. So they're going to keep that pack to still about 180 to 185 stocks that are going to be there. They've also gone on to approve the flexibility in voluntary delisting norms, this for the holding companies, which is quite interesting, because now they are going to be permitted to transfer their equity shares that are held by the holding companies to other listed companies to its public shareholders in a proportionate manner. So this is also something that was widely anticipated, and now that the regulator has given some clarity on these delisting norms, making it easier for holding companies. You also have the regulator quite smartly saying that any kind of regulated entity or its agents shall not have any association with any unregulated entity. And this is the important part, because we've seen a whole host of influencers and finfluencers that the SEBI chairperson, in fact, has gone on to speak about it and quite categorically even state why there has been a bone of contention. In fact, I'll just play out for you that soundbite of what she had to say and why they have put in this norm.
Entities which are regulated by us, they are now being mandated that they cannot associate with people who do one of two things, either of two things. One is if they are not registered investment advisors or research analysts, and yet they are giving investment advice or research analysis. The second is, irrespective of whether they are registered or unregistered, if they are making claims on performance or in terms of portfolio performance, their service performance, etc., unless it is specifically provided for them to be able to give that information of performance, if they are making claims without that approval, then again they are breaking the law.
Right, so they are breaking the laws, what she's saying quite categorically. But let's discuss that a little more in detail and all the outcomes that have come from that SEBI meet. And joining me for that is Shrikant Chouhan. He's the head of equity research retail at Kotak Securities. Good morning, Shrikant. Always a pleasure to have you with us here at Moneycontrol. A whole host of norms that have come out from that board meet by SEBI. Let's take one by one. And firstly, I'd want to speak about, the whole inclusion and exclusion from the F&O list. Now, there's been a whole host of talk about, perhaps there being more taxes for F&O trade as well when it comes to, the budget, and we could hear something on those rounds. Now, you have the SEBI chairperson also making, or rather saying that there is a need to be cautious right now what is happening in the F&O space. Would you also be of that sentiment? And, is that something that is worrisome just to be taking off from?
Yeah, good morning. Good morning, everyone. I think, whatever the regulations that now they have laid, we need to see them very carefully. And I think a lot of changes will come. They will again talk to some major stakeholders, I'm going to say, in this market. But broadly, I am of the view that the way there was a volume on the F&O segment, we need to somewhere take the precautionary steps. Because it is gaining on a month-on-month basis, and a lot of retailers, they were joining to the race. So broadly, I am of the view that it should be more towards how they can control these retailers. I'm going to say those who have low pockets from entering into this high-risk instrument. And I think whatever the norms and the regulations that they have laid out, I think that will help to improve the more and more efficiency in terms of settlements. So till now there is no problem as such, but if there is any event and because of that event the market crashes, then only the problem arises. So I think whatever the steps that right now we are taking is more welcome.
Right. It is a welcome step and more cautionary at this point, because we are seeing that kind of volumes when it comes to F&O trade. Well, another interesting happening that took place yesterday was the fact that Reliance Jio has gone on and announced an, tariff hikes. And this is something that was anticipated, of course, and we've been seeing telecom stocks a buzz for the past few days, and it was in anticipation of this. But now Reliance Jio has gone on to make those first kind of hikes. These range somewhere between 12 to 25% if you see across those different plans that they have. But interestingly, they've also announced an unlimited plan for its customers, which will be the data plan, which will be effective from 3rd of July. And this is for their 5G plan, of course. Another announcement that they came up with was something called Jio Bharat, as well as the Jio Bharat phone customers, which will now continue to enjoy the old rate. So the ones that are still still using this, the 4G ones will still get the old rates, whereas they also made announcements of 2 new apps, which is 5G AI as well as quantum security ones, which will be free for the first year. Now, interestingly, the pressure is now going to be building on the likes of an Airtel or a Vodafone Idea to follow suit and raise telecom tariffs. And in fact, even a lot of brokerages have come out with their reports on the fact that Jio has gone on to announce these hikes. Morgan Stanley says that the timing and quantum is largely in line, whereas JP Morgan says that, they were looking at a 25% hike, but this is 20%, but nonetheless it will still play out, and the hike will also go on to help them, although the estimated blended ARPUs would benefit in the range of about 16 to 18% for Bharti Airtel as well as Reliance Jio is what they are saying. They're also looking at Bharti Airtel could see a new floor of about 1,000 to 1,050 following this tariff hikes by Reliance Jio. Now, interesting what all is happening in the telecom space, because we just had Vodafone Idea also raise funds and try to become that formidable third player in this space. Raja, coming back to you, how are you looking at the telecom space? And also, this price hikes was something that was anticipated, but Bharti Airtel has been on the chart, on the gainers list for at least this whole week on a trot. Are there anything specific that you're liking among the telecom space?
Yeah, definitely. Like you mentioned, Bharti has shown some good traction here. And normally, when you speak about the telecom space, you normally speak about Idea, or you speak about you speak about Indus Tower. But then Bharti has been a outperformer, and I believe that the current move which we are seeing in Bharti is definitely expected to continue. And for those who are looking, Bharti was never considered as a good bet. But then if you see over the last 6 to 8 months, Bharti has consistently outperformed in the telecom space. And I believe that any dips which are occurring in the region of around 1300 could be a good investment bet. And levels of around 1400 could be a good trading bet.
Right. Shrikant, coming to you, we are seeing a whole host of, block deals that are taking place. A lot of investors looking, a lot of promoters looking to pair their stake. What does this really tell of the markets? Are we seeing it at a new high? And which is why you're seeing these promoters, take the benefits of that? Or one should be reading this in a different manner? How would you be looking at this?
Yeah, I think the markets, no doubt that they are trading at high, but at the same time, there is good amount of liquidity support in the market. And this liquidity is coming not only from the retailers, but it is coming from the institutions. So which is something positive, because if they are thinking to sell, they are not like always that they will sell to the weak hands. So right now, whatever that they are selling, their stakes, they are going into strong hands, and they will also help the company in the future to give more their advice. So broadly, I am of the view that they are not going to sell so on immediate basis, and which is something always supports to the market. I'm going to say the downside gets protected for any company or even for the market. So it's a healthy sign for the market. The base of the market is improving because of this. And the ownership, if the ownership is coming down of promoters at right time, then I think it helps to promoters as well as to the market and to the retailers. So I am of the view that this is going to continue. The markets are going to remain like this. But if they are if the buyers are institutions, then certainly it will help the market in the future also.
Right. Right. What about, this whole, we are seeing this churn, and Shrikant, maybe you can only take this and give us what are the sectors that one should be focusing on in this particular kind of market environment? Of course, we do have the budget that will, then put the focus back on PSUs and the likes. But if you have to look at overall FY25, what do you think will be those striking points or where you would want to be placing your money? Does banking really feature on that list, or can IT be that contra call call at this point. How are you looking at least FY25 figure? We are 6 months down through this year. So for the remaining 6 that we have, what are we supposed to be looking at?
Yeah, I think, we saw broad-based rally in this market till to 24,000 levels. But while looking at the next 6 months and based on the previous earnings, we are of the view that BFSI, bank stocks, NBFCs, they are going to do well because most of these stocks are still available 10 to 15% lower from their fair value. So there is like a very clear-cut upside in banks as well as in NBFCs, insurance companies. We also like tech companies because most of these stocks are at now their lower base. So if the liquidity is going to remain like this, if the momentum is going to remain like this, and if there is like the chances of cutting interest rates in the US increases, then it will help IT companies to do well. So there also, we feel that we should look for taking some bets with a medium to long-term view, not with a very short-term view, because in the short term, all these IT companies are going to remain highly volatile. But if it's a medium to long-term view, then I'm very much sure that stocks like Infosys, TCS, as well as Tech Mahindra can do well.
Right, quite interesting there. In fact, I'm going to ask Raja quickly to come in on Infosys and what are the charts saying, because we've got a query asking on what Infosys is looking like. And post that, Raja, also tell us what you have recommendations for our viewers, or what stocks are on your radar as well.
Yeah, sure. So first, going on to Infosys, the IT pack has been quite subdued, and they have not really given us the kind of encouragement which we were expecting. And there is always some sector which is going to be on the sidelines. And this time in the rally, there have been other different kinds of sectors that have been on focus, and IT, banks, the chemical sector, they have been on the sidelines. Now we can see that the IT sector is forming a base over the last 6 months, and I feel that the time has come for IT to kick in. So I envisage that the leader Infosys could take some steps ahead, and the recent up move over the 1500 levels does augur well for Infosys, and I see a target towards 1650 within the next 3 months. So those are looking to use this current rise in Infosys as an investment play. This is a good time.
Right. And what are your picks for our viewers? Do you have anything that's on your radar for the July series?
Yeah, so the stocks which I am tracking for the July series, the first stock is Adani Ports. And after a strong move few weeks ago, the stock has given a nice pullback, and the current supports are playing out well. And also with the government support, I'm sure that the Adani Group stocks are going to see some more traction. And Adani Ports is definitely an actively traded stock. So one could look to buy it at current levels, use a stop loss of around 1460 for a target towards 1510 and 1525. So this could be an intraday play, or it could also be a multi-day play. Now, the second stock which I would like to recommend is an ABB. ABB, a buy at current levels with a stop below 8600 for a target towards 8780 and 8825.
Right. Right. Two interesting picks there from Raja, Adani Ports, as well as ABB is what he asked for us. But let me thank both my guests, Raja Venkatraman as well as Shrikant Chouhan, for giving us their time and speaking with us, helping our viewers with a couple of queries as well. And hope this is a fantastic Friday for you all and a good start to the July series. Of course, we have that big T20 World Cup match to look forward to for this weekend. So I'm going to ask you gentlemen to enjoy that. And thank you so much for giving us your time.
My pleasure.
Well, let's move on then. And another big surprise, not really surprise, but another big factor that is going to at least help India, or at least bring in those FIIs and FPI inflows, is the fact that now Indian government bonds are all set to be included into that JP Morgan Government Bond Index for emerging markets, or as the short form goes, it will be called JP Morgan GBIEM. Now, from this will happen later today when the London markets open. Of course, that's when we're going to perhaps see how this inclusion takes place, and it will occur also over a period of 10 months that these bonds will start getting included from today up until March 31st of 2025. You're also going to see India technically at this point will have just a 1% weightage in this bond index, which will then gradually rise to about 10% over a 10-month period. So will now that these Indian bonds are going to go global, what does that really mean for our economy, for the currency, as well as the rates? Joining me to discuss that is Vishal Goenka. He's the co-founder at IndiaBonds.com. Good morning, Vishal. Good to have you with us here at Moneycontrol. Well, now we do have the announcement came back in September that the inclusion is going to happen. And of course, this is set to attract that significant inflow that we've been anticipating. Some of us even pegging it at about 25,000 to 25 to 30 billion dollars. I beg your pardon there. So, how would you really be reacting to this watershed moment now that we've had enough of time to really be settling this in, or do you think it's all priced in already?
Stacy, thank you for the opportunity. Happy to see bonds in the morning bell. It's largely equities, so bonds are the silent capital builder behind. But let me jump straight into what's happening. JP Morgan Emerging Bond Index inclusion for India is truly a watershed moment. Personally, I've been seeing conversations around this for the last 10 to 15 years. What does it actually mean? As you said, 1% weightage of the index for the next 10 months. And we anticipate $25 to $30 billion of foreign inflow coming in the next 10 to 12 months. Now, the immediate impact is going to be very muted, believe me, today, because people are well positioned. So if I see foreign inflows in bonds in the last 6 to 9 months, investors have come into $8 to $10 billion. So there is some pre-positioning already. So there are no fireworks today expected at all. But what it does is it opens and puts India in the global spotlight. India is a deficit country, needs foreign capital for growth, for infrastructure development, for corporate financing. So this is actually a start of something much bigger in the years to come. We start with 25-30 billion now. We are included in Bloomberg Global Index, which will get another 2-3 billion starting January. But in the years to come, investment comes in government bonds to start with, and then in public sector bonds, and then in corporate bonds. So getting a huge international investor class who's a passive tracker. What do I mean by passive tracker? Being part of an index means this is not the so-called hot money. This money usually lies down in the country for like 5, 10, 20 years, as our experience shows in other economies. So truly an amazing moment for India, because the bond market is $2.6 trillion in India. As we know, the equity market cap is around 4.25 trillion, hitting all-time highs. In developed economies, the bond market is actually bigger than the equity market. India is obviously a rapidly developing economy. So I do anticipate the bond market will grow by $1 trillion, $1.5 trillion in another 3 years' time.
Right. Well, let me get a little technical here, because once included, we will have that single highest duration across the index, which is at 7.03 years, and also that being above average, the yield to maturity, at least of what I'm given to understand. Help us simplify this for somebody who's just looking at this headline and saying, okay, does this mean, what does this mean for Indian bonds? What do we mean by this 7.3 years or so, or the yield to maturity rate being at 7.09%?
Absolutely. I'll try to demystify. Essentially, the longer the maturity of a bond, the volatility of the bond or the price movement of the bond is higher for interest rate movement, which is called duration. The 7.03 duration means there are about 27 bonds that are eligible to go in this index in the FAR, which is freely acceptable route. So investors can buy any of these 27 government bonds. Now, if you compile all these bonds, they're usually very long maturity. They're 10 years, 15, 20-year, 30-year bonds. So if I combine the whole thing, it shows that basically long-term maturity bonds are available, and the average duration is 7.03. The average yield is a weighted average yield of all the bonds. Every bond gives you a certain return. Typical government bond prices are between 7% to 7.25. So it's nothing but just a collection or an average of the maturity value calculated by duration and an average yield. Now, what does this mean? This makes it the highest yield. So the second largest index weightage is China. The China bond yields are at 2.3, 2.4%. Now, given that, we are talking about inflation is at peak, close to or at peak globally, as well as in India, RBI has been on hold for interest rates since February 23. This is a perfect time for investors to come in because it is giving you one of the highest yields in anticipation that there will be future rate cuts. Rate cuts mean bond prices go higher. So not only do you make a 7.5 return, 7.05 return, but you can also make capital gains. And interest rate cycles move in 2 to 3 year cycles. So we anticipate in the next year or two, we're definitely not going higher. So all that it means that India is actually really set it's perfect time. You get a high yield, you pick up duration, which means taking more risk in anticipation of rates to come down. That's all it means. But for your viewers, great time to be in fixed income in India.
Right, great time. In fact, also looking at, the rupee and how the impact of this inclusion would definitely have that indirect, we would say, but it would go on to strengthen the Indian rupee vis-a-vis the dollar, at least for now. And of course, a stronger rupee would then support more inflows, not just into the debt markets, but also the equity markets. Could that be, a ripple effect that we could see? And how are you looking at the impact on the rupee per se as well?
I was waiting for equity market correlation question. Thank you. But any foreign inflow is great for the rupee, right? So if we get a passive 25, 30, 35 billion inflow, it's fantastic for the rupee. Having said that, in the last 12 months, the volatility of the rupee has been absolutely the lowest as compared to any of the global peers. So really very stable environment. It's moved in the range of like barely 2%. So definitely constructive for the rupee going ahead. But again, coming back to fixed income, I think it's a great time to be investing in bonds. Not only foreign investors are coming in, but the big movement domestically is happening is the online bond platform. So to the average viewer, an average investor, you can actually click and buy a bond in 5 minutes for 10,000 rupees to a lakh minimum size. So really exciting times for the fixed income market.
Mentioned that today we are not likely to see any big boom in terms of spikes in bond prices or yields, but how does this trajectory flow from here on? What can we expect, or rather any levels that one could see?
No, so I feel, as I said, no fireworks today, but having a new big buyer in the market always keeps the yield suppressed. That's good for the economy because corporates or companies that raise money or financing, if interest rates are suppressed, they get cheaper financing. I do not anticipate any policy change by RBI in the next 6 to 9 months. I think we are keeping, as per governor's comments, keeping an eye on inflationary pressures in the near term. So no specific levels for me to watch. I think it's around 7% yield for the 10-year bond. I think it's going to be pretty range bound for the next 3 months in the 10 to 15 basis points range. But again, as I said, good time for individual investors to diversify their portfolio. You can't put all eggs in one basket. I know equity is lifetime high, but bonds help you to preserve capital. So, and it wasn't accessible till 2 years ago for the common man, but now it is.
So, well, exciting times. In fact, that we are actually talking about bonds on opening bell, and also that the common man is now going to be talking about bonds because they have a reason to. Thank you so much, Vishal Goenka, the co-founder at indiabonds.com, for giving us your time and speaking with us and helping our viewers understand what really is happening with this India's inclusion into the JP Morgan bond
index. Thank you for having me.
Thanks so much.
Well,
with that, we're completely out of time and we have to wrap up this edition. So it's a goodbye for me and the entire team that puts this piece together. Thanks so much for tuning in. Right now, the markets are rather flat, but we have a good start, we would say, to the July series. So we'll have to wait and see where we end the day with, and whether it's a newer, higher high that we manage to close to. 24,000 levels, of course, is what we're going to try and hold on to and keep that as our support levels for the Nifty, and so that for the sensex around those 79,000 odd levels. But thank you all so much for watching. Do keep posting us your feedback in the comment section below, and also follow us at the link at the bottom of your screen for all your other updates. Come back right here to moneycontrol.com as well as the Moneycontrol app. I'll see you next week, and go enjoy the cricket T20 match over the weekend.